Hello. Welcome back, everyone, to Alpha Beta Soup. I'm TXMC. Today, we will wrap up our coverage of the FTX fallout. Since the last video, FTX officially filed for bankruptcy, and there has been a domino rally of related events that have unfolded in the days since. We need to catch you up on all the goings-on. I'm sure I'll miss a piece here or there, but I'll do my best to give you the highlights and what I think it means. So don't go anywhere, we have much to discuss. If you enjoy this content, make sure to give my video a thumbs up, subscribe to my channel, and share it amongst your friends. I appreciate your support, and we have much to discuss, so let's get into it. And right here, you can see on Friday of last week, FTX officially filed for bankruptcy. Now, there's been a lot of smoke and mirrors and a lot of obfuscation going on around this entire event. SBF has maintained his innocence. He has continued to lie and deflect, and we will try to uncover that as we're rolling through these events here. So let's rewind to last week, around the day and the day before that they actually filed for bankruptcy. There were a lot of rumors going around that FTX US would also be affected by the filing. SBF came out on November 10th, that was last Thursday, the day before official bankruptcy, saying this is all about FTX International, the non-US exchange. FTX US users are fine. Well, not 24 hours later, FTX filed bankruptcy and FTX US was listed amongst the entities. So SBF lied through his teeth that American customers and the American exchange would avoid any fallout from this disaster. And here you can see I've put them together literally one day apart, almost 24 hours later. He files for bankruptcy and includes the entity he told people was not at risk. Also on the day that he lied about FTX US, you can see here on the 10th of November, there was this tweet that went out from FTX official and it said, per our Bahamian headquarter regulation and regulators, we've begun to facilitate withdrawals of Bahamian funds. So you may see some withdrawals processed by FTX. Now, there are a lot of people on Twitter who follow the on-chain movement of FTX and Alameda. I'm not super well versed on that, so I'm not going to take you guys down that rabbit hole. You can go find those things if you want. But there was a lot of attention focused on the movement of assets in and out of FTX's possession in these couple of days. And they were apparently shuffling some things around and it caught people's eye. So they sent this tweet out and they said, this is because Bahamian regulators told us that we need to facilitate withdrawals. Well, one day later, the Bahamian Securities Commission released this press report and said the commission wishes to advise that it has not directed, authorized, or suggested to FTX Digital Markets the prioritization of withdrawals for Bahamian clients. The commission further notes that such transactions may be characterized as voidable. So they are basically saying this is bullshit. So he lied about FTX not being in the filing. It was in the filing. They lied about being told to facilitate withdrawals by regulators. The regulators said it was bullshit. So you can see a trend already developing here where SBF is obfuscating the truth and creating a lot of smoke and mirrors. What also dropped the day after the bankruptcy filing, Alameda and FTX executives are said to have known FTX was using customer funds. So we don't know all of the truth yet. We won't know for probably several weeks or months. But this story was making the rounds a few days ago, and it fits with much of what we've been hearing, that there was an incestuous relationship between FTX and Alameda, two entities owned by SBF, but should have, through all intents and purposes, been separate entities. One of them is managing customer funds and providing a marketplace. The other one is literally a predatory trading and investment firm. So they should have been two different entities, but instead they shared customer funds. And it seems that FTX actually gave Alameda billions of dollars of customer funds at one point so that they could meet their obligations, presumably assuming that they could float those funds and get them back at a later date. But because of the crashes and the insolvencies this year, that did not manifest, and they instead were left with a gaping hole in their finances, which we will get to in just a bit. And that bit is now. It came out from the FT's reporting, the Financial Times, that FTX FTX held less than $1 billion in liquid assets against $9 billion in liabilities. And this happened after Sam Bankman-Fried circulated a really hastily assembled balance sheet of FTX assets. This is what it looked like. This is a big fucking mess. This was clearly a hand-assembled attempt to represent the balance sheet of FTX. There's a whole lot on here. You can see if you were to pause my screen and really look at it, they hold some key crypto and stable coins. They hold various currencies and some less liquid coins. And then they have some really illiquid complete shit coins. Stuff like Oxy and Maps and Serum. But the real takeaways here, there's a couple of things. First of all, there are these weird little comments mixed around in here that are like apologies and things that just seem odd included in with these very important details. There were many things I wish I could do differently, etc., etc. These are all rough values and could be slightly off. They also change a bit over time as trades happen. What? The real bread and butter of looking at this big shit show is that, first of all, he mentions withdrawals on Sunday. This is the Sunday before last week. This was when he filed for bankruptcy. $5 billion worth of withdrawals. And also a hidden, poorly labeled account that was missing $8 billion. Now, this is part of his claim for the wrongdoing. He claims that they mislabeled an account internally that contained customer funds. They labeled it as something else and that they spent those funds. But it's coming out from this story, and I would venture to guess, based on his level of truthfulness throughout this saga, that they knowingly spent those funds, and they're now trying to cover it up, saying it was a poorly internally labeled account. But if you look up here, liabilities, $8.8 billion, liquid assets, $899 million. So they had a 9-to-1 liability to liquid asset ratio. They had an $8 billion hole in their finances, and that hole was entirely customer funds. As you can tell from this reporting by the Wall Street Journal, both they and Alameda knew this was happening. So it's safe to assume prison. Prison time is on the menu for Sam Bankman-Fried, Sam Trabucco, Caroline, whatever her last name is, Ellison. You would assume that all of these players would likely be facing jail time in a just world. I won't hold my breath for that, but these are absolutely criminal proceedings. So the balance sheet was a huge mess, $8 billion missing from it. Additionally, they listed some of their investors during the bankruptcy filing, and we got to find out all the different entities that have given them money. Now, this might be a little blurry. This was the best resolution version I could find of this. But what you're seeing here are all of the people that gave FTX money during their capital raises, which raise round it was, and how many millions of dollars it was. Now, down here, you may see Gisele Bündchen and Tom Brady listed. Their amount is not listed as they were angel investors, but it's assumed that it's in the hundreds of millions of dollars. And up here, you can see some of these other entities. Here's Sequoia Capital, which we reviewed in the prior video because of their ridiculous claims of due diligence. Highly recommend you check out the previous video if you want to see that. We've also got Paradigm in here, Tiger Global, Lightspeed Management, Insight Venture Management, Temasek. A lot of huge funds up here. Also, Ontario Teachers Pension Plan. You see that right there? Teachers Venture North. See that right there? We had actual teacher pension plans in here. This pension plan was exposed for $400 million. So this is part of the reason why this saga touches everything and why it's bigger than Mt. Gox. Mt. Gox was just Bitcoin. It was lost. It was a huge percentage of the market, and it was existential for Bitcoin at a time when it was still in its infancy. But this time, FTX touches everything. The scale of it is larger. The amount of dollars that were lost is larger. The amount of customers is larger. It also touches politics. It touches celebrities. It touches pension plans, everything. So this saga is orders of magnitude larger in scale than the Mt. Gox fall. And you can see here there are a lot of funds and businesses that were severely exposed, and most of them are going to get zero or pennies back on their investment. Additionally, in the bankruptcy filing, there were 134 entities listed in total underneath the web owned by Sam Bankman-Fried. Just look at all of these different businesses and entity names. This is a shell game of fuckery. And all of these were listed under one man's ownership in total, and a couple of his partners, but mostly just SBF. And in them, as we mentioned, FTX US listed right down here. Another thing that came out that was really surprising surprising was this image right here, which is apparently of the FTX org chart. This is their organizational structure, and it's a massive mess. You could guess by seeing how many entities they have that they have an org structure that looks like this. He's got his partners listed up here: Nishad Singh, Gary Wang, Jen Chan, but most of it rolls up to SBF. So when I saw this org chart and its huge mess, and then you think about who his dad is. Joseph Bankman is a professor of law at Stanford, and he specializes in tax policy and tax structures. This is a man who knows a lot about corporate structure, tax compliance, all of those things. And then you look at FTX's org chart, and it's hard not to believe that his dad played a huge influence and perhaps an active role in the setup of this business, in which case he may be culpable in some of these proceedings. I don't know that for sure, but seeing this chart and seeing who his dad is and what he specializes in, I can't help but notice some blurred lines. Additionally, his mother, Barbara Freed, is also a lawyer and a professor at Stanford. She also heads up the Mind the Gap PAC, which is a huge Democrat donor. So we've got two lawyer parents, one of them who is an expert on tax compliance and corporate structures, another one that helps to run one of the largest Democrat PACs in the country. When you add that up and you consider that SBF is listed as a $40 million donor to the Democrat Party, the second largest donor behind George Soros to the Democrat Party, there's a lot of weird dotted lines being drawn in the background of this entire saga here. But it's not just SBF by himself. It is worth pointing out that further down this list is Ryan Salam, who is the head of FTX US. He is listed as the number 10 donor to the Republican side. He gave $23.5 million to Republicans. He's number 14 in the overall list of individual donors to politics. So SBF is listed at number 6. He's the number 2 Democrat donor, and his buddy Ryan Salam is the number 10 Republican donor. So these two gentlemen are using what is presumably stolen funds, considering that their businesses have billions of dollars of missing funds. They're donating millions upon millions of dollars to politicians. SBF, in particular, donates heavily to the Democrats, and his mom runs one of the largest Democrat PACs in the country. So is it any wonder and any surprise that SBF was the darling of Washington, that he was cozying up to all of these regulators, that he was seen in all these different photos with various politicians and heads of compliance around the country? Not a surprise to me. They're all in bed together, and I would venture to guess that in the next few months we may see either pressure put on certain policymakers or their willful admission of and surrendering of funds that were given to them by SBF, because these people, I would assume, would not want to be publicly attached to any of this crisis. And many of them took money directly from the man who orchestrated it. So I will be interested to watch how this unfolds, particularly as we are now in the wake of the midterm elections. No one is currently seeking votes. We might start to see the fallout come from this. But there's more that spilled out of this saga. So in the wake of what happened with FTX, there was a scramble amongst various exchanges last week to try to provide proof of reserves. They were working with Nansen, which is an intelligence and data company in the crypto space, and many of the exchanges were trying to get together a snapshot of their customer reserves to prove the fact that they are not like FTX and that they are not missing billions in customer assets. Well, one of those was Crypto.com, and they accidentally transferred $400 million worth of Ethereum to Gate.io, which is a separate exchange. That represented 80% of their held Ethereum. Now, they did manage to get it back, but during this process, the head of Crypto.com, he was coming out and saying it's supposed to be a move to a new cold storage address, but it was sent to a whitelisted external exchange. We worked with Gate, and the funds were subsequently returned, and new processes were implemented. But they irresponsibly sent $400 million worth of other people's assets to a completely different business, and they were only able to get them back because that business helped to cooperate. What if that ETH had been sent to an individual that they couldn't get in touch with? The risk is enormous. And if anything has been demonstrated by this saga to those of you who are newer to this space, it is that you should be inclined and motivated to take custody of your assets as soon as humanly possible, because these people have demonstrated zero level of responsibility responsibility or gravitas in their management of your wealth and your assets. Additionally, it was found that Huobi had $18 million worth of crypto, 13 million of which were customer assets, sitting on FTX. I do not know why Huobi would have any of their customer assets on a completely separate exchange. They are their own entity. They live in their own jurisdiction. They have their own security and management processes. I have no idea on earth why they would have $13 million worth of their customers' assets sitting on a now defunct exchange. But that also dropped in all of this news. So Crypto.com, very irresponsible. Huobi, additionally seeming very suspect, though I'm not sure the reasoning behind this. Additional fallout. BlockFi is preparing for bankruptcy. They were heavily exposed to FTX. They had a line of credit from FTX US, which is obviously part of the bankruptcy filings, and they are now no longer able to operate normally. They're preparing for bankruptcy. Hedge fund Galois Capital announced that they had a huge percentage of their assets trapped on FTX, likely never to get them back. They are listed down here among the investors in FTX, as well as being their own hedge fund. They have tons of assets on FTX. They're probably never getting them back. Travis Kling, the head of the Ikigai fund, announced that they had to shut their doors. I don't know why he deleted the first tweet of this thread, but didn't delete the rest of them. But this tweet basically said, we were heavily exposed to FTX. We still had a bunch of our assets in their custody, and now they're all gone and we don't know what's going to happen. This is one of the more well-respected and well-thought-of people in the crypto space, and he demonstrated extremely questionable risk management in continuing to have his funds on FTX at any point in the last couple of weeks. I'm not sure why they were so exposed to FTX, why they had so much of their holdings in that one place, but that is another fund that is down as a result of this fallout. Then additionally, this morning, after a surge of withdrawal requests, Genesis Capital, which is the lending desk arm of Genesis, has suspended customer withdrawals in the wake of FTX's collapse. So you can see, this is a whirlwind. I'm blasting through headlines and events here, and we haven't come up for air yet. I've probably listed 24 events that have occurred in the last week and a half. All of this is a result of this one exchange going down. The amount of incestuous, cross-current exposure in this industry is shocking. And it brings me back to this tweet from Barry Silbert, who heads up the company that owns Grayscale. He made this tweet in June of last year, and he said, there is a daisy chain of borrowers and lenders in the crypto space. Most well capitalized, but some are not. Lots of leverage still in the ecosystem, including in some non-obvious places. Important to understand counterparty risk and where are the weak links in the chain. This was a cryptic message at the time that it went out, but when you see what's been going on in the last few months, first with the fall of Luna, with the subsequent waterfall of cascading failures resulting from the Three Arrows Capital collapse and all of the different lenders exposed to them, and now with the collapse of FTX, all of the people who held assets with them, their missing customer funds, all of the different investors who are now marking to zero their exposure to FTX, the different exchanges who had assets with them. The fallout is continuing, and we're learning more and more about the interdependencies behind the curtain in this market. It turns out that a huge portion of the bull run that occurred last year was driven by a handful of over-leveraged, highly capitalized cowboy traders. Between Three Arrows Capital, Alameda Research, and their associated cronies, they created an illusion of broad, widespread adoption and fervor in a market that really was propped up by popsicle sticks and vapor by the time we got to the middle of last year. When the Grayscale arbitrage dried up in the early part of last year and that premium went negative, funds that had been riding that to the top transferred into more riskier ventures. They moved further out on the risk curve, greater exposing themselves to the ultimate fall in assets that began at the beginning of this year. So Barry laid out a huge hint a year and change ago, and we didn't know exactly what he meant at the time, and it's now seeming prescient as we're seeing all of these events unfolding. And if matters weren't complicated enough, it seems that FTX was being hacked during all of this. So about 4 or 5 days ago, it was found that hundreds of millions of dollars worth of various assets in FTX's possession were being siphoned out of their addresses by an unknown actor. And people have been following this for several days, and they're calling this person the FTX exploiter. They have now drained about $400 million worth of assets out of FTX's possession, some of those that were listed over here on this page. And Nansen, which is the company that's been working with those exchanges to provide proof of reserves, they posted a free dashboard. I will leave a link for this in the description down below. This dashboard is tracking the FTX exploiter. This is their holdings. And you can see they now have 235,000 Ethereum on this one address, which if you go to Etherscan and you look at the top addresses by Ethereum balance, and you go down here, that address is now number 34. They are the 34th largest holder of Ethereum on planet Earth as of right now, after stealing it from FTX. Ethereum just went through their merge a couple months ago. They now have completely OFAC compliant validators, and they are not resistant to censorship. So what I'm interested to see is if whether all these new OFAC compliant validators on Ethereum 2.0 will give in if regulators pressure them to censor the transactions coming out of this address. This address that is now in the top 34 biggest addresses holding Ethereum. Ethereum has weakened itself to censorship resistance from the merge by going fully proof of stake, and now all their validators are OFAC compliant. Will regulators force them to censor transactions? This will be an interesting fight, and one I am keen to see play out. But like I said, if you do want to track the FTX exploiters holdings, I'll leave a link for this in the description down below. So one of the later pieces of this whole saga that really happened yesterday, and it left a bad taste in my mouth, and I know many others that I saw on Twitter, it seems like a redemption arc is already being constructed for SBF. So yesterday, Kevin O'Leary, who was one of his biggest proponents before his fall from grace, went on to Rand Nooner's podcast yesterday and said that he probably would give SBF money again if he tried to start up a new venture. He called SBF one of the greatest traders of his generation and showed very little remorse or concern for the wrongdoings of this man that he previously supported. He threw out an absolute softball for the casual public who are not closely following this saga, who might think that Kevin O'Leary knows what he's talking about because he is a wealthy celebrity who's on television. And he provided very little criticism of SBF's actions and said he'd work with him again. And this happened on the same day that the New York Times released this piece. And I gotta tell you, this is one of the most rancid, pathetic pieces of journalism that I have ever encountered. It is feckless, toothless, dickless, worthless. There is not a critical word levied upon the man photoed here on the right at any point in this article. They interview SBF directly just a few days ago as this saga is unfolding. And at no point in this article does it call him a criminal? Does it point out his fraud? Does it accuse him of any wrongdoing? In fact, they allow him to postulate that much of this blame lies with Alameda, who he claims he didn't understand were so underwater, even though everything falls on him as the owner of both companies. This utterly pathetic softball piece came out on the same day that Kevin O'Leary said he would invest with SBF again. And I just can't help but marry these concepts in my mind between this left-leaning publication providing a total softball interview on the same day that Kevin O'Leary, who is constantly suckering retail into bad decisions, also providing defense for SBF on the same day. And then we think about who his parents were, how Barbara Freed heads up the Mind the Gap super PAC that donates heavily to Democrats, and SBF himself also is a major political donor. When I combine all those things in my head, I can't help but feel that there is an intentional narrative being constructed for the casual public that is not well versed on this subject. At the same time, we're seeing people in TradFi lay the blame for this saga at the feet of crypto, at the feet of state-free finance, claiming that these are unfulfilled promises of Bitcoin and of crypto writ large, and that it somehow proves that those assets don't have a future. But friends, the scam perpetrated by Sam Bankman-Fried, the absconsion of client funds, schemes, the spinning up of flywheel assets that enrich only their founders, those Ponzi's have been deployed on the general public in traditional finance and banking for centuries. You can go back to ancient China and find examples of this. It's not fair to lay it at the feet of Bitcoin or at the feet of crypto writ large. And I don't even care about these other shitcoin projects. I'm just trying to be objective here. And what SBF did is nothing new. It has been done many times before, for generations, for centuries, for millennia even. And it says absolutely nothing about Bitcoin. Bitcoin has not failed anyone in this process. What has failed people is the TradFi infrastructure that has been laid atop this nascent asset class. Bitcoin is not remotely culpable in this saga. It has done nothing wrong. It has not failed any of its users. It has not censored any of their transactions. It has not confiscated any of their funds. It continues to find new blocks every 10 minutes, issue Bitcoin on a repeating schedule, and continue to churn along. It is completely unaware of the events of FTX and Sam Bankman-Fried, and it will continue to be here, decades from now, operating as it is today. This is a failure of human greed, of hubris, of sociopathy, and we should call it out for what it is. And the entirety of it lays at the feet of Sam Bankman-Fried, of Sam Trabucco, former head of Alameda Research, and Caroline Ellison, the most recent head of Alameda. Those three people and their other business partners are fully culpable in this saga. They are the ones that absconded with customer funds. They are the ones who continually lied to the public and told them that they were fine and that they were safe, only to have all of their assets dissolved and liquidated in a bankruptcy proceeding. So this is a huge mess. I blasted through a lot of events. Maybe it was difficult to keep up with, but you can see how there are many tendrils to this. We've got various funds going under, Genesis halting lending withdrawals, Crypto.com losing $400 million of Ethereum and having to get it back just so that they could prove they have customer reserves, BlockFi probably filing for bankruptcy, Huobi losing $13 million of client funds on FTX, Galois Capital losing a bunch of funds on FTX, teachers' pension funds, Tom Brady and Gisele Bündchen, Tiger Global. Everyone has lost money here. A new hacker is now the 34th largest owner of Ethereum thanks to an exploit. This is just a massive shit show. The optics of this on normies are absolutely terrible. They're ghastly. It will take years to recover from this. And it's very likely that we will see more bodies floating to the surface. I've listed a dozen of them in this video, but it's only been a week. So who knows what else will come from this. And for those of you still watching right now, what I would caution you against is accepting whatever narratives come out of this. I would be extremely cautious giving any credence to people like Kyle Davies and Zhu Su, the former heads of Three Arrows Capital, who have begun crawling out of their sewers while SBF is now clearly the major villain. The mainstream media has no idea what's going on here, and it's clear that they are compromised. I believe that many of the people talking about this saga are fully compromised assets. So when I really sit back and I think about this, I think about how big this saga is, how many different businesses and individuals had their hands in the FTX cookie jar. When I think about the close ties that SBF and his parents have to politics, particularly the current regime in power. When I think about the mainstream media and the talking heads already planting seeds for a redemption arc in the soil of the general public so that they can accept him and accept this saga in the future. And I think about the old adage that you never waste a crisis. I feel like this is setting up for regulatory capture of this space, for an aggressive push by politics to try to get their arms around this, to try to make it more difficult for you to take sovereign custody of your digital assets. And they will use this as leverage. We're already seeing the beginnings of it. This news came out yesterday that the New York Federal Reserve and multiple global banking giants, including JP Morgan, have just started a 12-week digital dollar pilot. They will use this saga as an excuse to drive forth central bank digital currencies. CBDCs should be opposed by every human being on Earth. They represent a grim panopticon, complete omnipresent knowledge of your transactions, your wealth, your spending, your interests. They would have infinitely granular detail about every American's spending and investing habits, even even more than they have now should a CBDC go into place. They would have complete control over the financial infrastructure. We should oppose this with every ounce of our being, and they will use events like this to drive it forward. They will tamp down the blame on the traditional fiat Ponzi-nomic bullshit that actually led to this, the actual wrongdoing of SBF. They will instead plant the blame on cryptocurrency, on attempts to create state-free finance, on the existence of commerce outside the regulatory moat. They will attack that, not the behavior of SBF and his actual frauding of customers. So pay attention to the narratives coming out of this. Pay attention to the lens by which they characterize what happened. And do not forget that this scam is not unlike scams that have been run for centuries. It is completely the blame of human greed, and at no point during this has Bitcoin failed a single one of its holders. I encourage you to consider, if you have not already, taking sovereign custody of your Bitcoin. It is not that complicated. It is well worth the time you invest in making that security a priority. Even if you don't take custody of all of it, I recommend you have some of it in a place where no regulatory body can take it from you. That's one of the few and most powerful things you can do to protect yourself in an event like this, is make sure that there is no counterparty risk between you and your wealth. So, we ran through the gamut. I tried to encapsulate as many of these events as I could, and it's possible that I left some of them off. When I started recording this video, I even wrote down a list of all the different things I wanted to make sure that I mentioned, because so much has happened in the last 10 days, and my list, I'm not kidding, has 23 items on it. I hope that I got through as many of them as possible. I'm sure that I left out some details, but you can see that this mess is widespread. There were entire swaths of this industry that were exposed to the nefarious goings-on in FTX, whether knowingly or unknowingly. Many people believed SBF was a good faith actor. There were not a lot of people raising red flags before a few weeks ago. There will be plenty of revisionist history by people claiming that they knew that he was up to no good, they had a funny feeling, but if you check the receipts, most people were not warning anyone that this would happen. There were very few who were. Hopefully many of those people learned from this event. I would encourage all of you to take sovereign custody of your Bitcoin, as much of it as you are comfortable doing, preferably all of it. I leave that decision to you, but I highly recommend you give it serious consideration. Because if these events have shown us anything, it's that counterparty risk is ever present, and you cannot trust any of these businesses with your wealth. Regulation will not necessarily fix all of those problems, particularly if it is not enacted smartly. And we're already seeing by the manipulation of these narratives, by the laying of the groundwork to pivot the blame away from SBF and the traditional scammery that has been run for generations, and to instead characterize this as a flaw of a nascent asset class that is disrupting traditional finance in crypto and in Bitcoin. They will try to blame it on that, and you can already see them trying to do that, trying to turn the barge in that direction. Be cautious of any news about digital dollar pilots and conversations around CBDCs. If regulation was already coming as a result of the Luna fiasco, it is now been kicked into hyperspeed. And because of the amount of politicians that are likely exposed to SBF's wrongdoings, it should not come as a surprise to anyone if they are not eager to discuss the details of his wrongdoing, but instead are eager to discuss the failures of Bitcoin and the surrounding crypto space. Make sure you follow me here on Twitter at TXMCTrades. Also, make sure you check out my newsletter at alphabetasoup.io. There's a link in the description down below. It's also the pinned tweet on my bio. Highly recommend you check it out. It's where I post a lot of my longer form research and ideas, and you can get interactive versions of my charts. And that's where we'll leave it today, guys. We're not even going to look at price charts today. We're not going to talk about the economy. We'll get to those in the next video. So be patient with me. We'll talk again in a few days and cover some other things we left off. Please take care of yourselves, friends. Take care of your financial assets. Take custody of your sovereignty. Be mindful of the narratives coming out of regulators and mainstream media about this event. They're already trying to manipulate sentiment. But that's it. That's where I'll leave it for you today. We will talk about more in the next video. So until we chat again, take care of yourselves, friends. Be kind to each other. We will chat again in the very near future. Cheers, friends.